class. In this video, we're going to be starting our discussion of Chapter 2, which is the first half of job order costing. Chapters 2 and 3 both look at job order costing, and this is going to be that first half. So job order costing, it's a kind of costing system used in managerial accounting for different kinds of businesses. Okay, for a business to use job order costing, certain criteria needs to be met in order for it to make sense to use job order costing. So if a company decides to use job order costing, then it is making many different products each period, and the products are made to order. And the jobs being worked on are each unique, requiring costs to be traced and allocated to each job, which requires record keeping for each job. Okay, so just to clarify, if a company uses job order costing, it's making many different products. Okay, many different products each period. The products are made to order or manufactured to order. Okay, and each job is unique. Okay, and because of that, it is required that we trace and allocate costs to each job and maintain records of each job separately. So an example of a company or part of a company that would need to use that, if we look at Disney, but specifically it's movie production as an example. So if Disney makes a movie, that movie is going to be different from the prior movie that was worked on, right? And it's made to order or produced to order, and it's going to be unique. Each movie is going to have a different set of costs and a mixture of costs that go into actually producing that movie. So let's say, for example, the new Mulan movie that came out. Okay, there are a lot of different costs associated with getting that movie from an unfinished product, just a concept, to complete, right, and ready to be made public, right? So this is not something that we can just throw into a bin of other movies and add all the costs of all these movies for the last year into one general bin, right, and just divide those costs up evenly. That wouldn't be an accurate depiction of what it costs to make this movie. So this movie, this Mulan movie, for example, this would be treated as a job. And we would then keep track of all those different costs associated with making that movie. And those costs will be made up of direct costs that we can directly trace to that movie, and also indirect costs that we can't necessarily trace, but that we have to allocate to that movie. Okay, so that's the main idea behind job order costing, and in what situations we would actually be using that from a managerial perspective. Okay, so when it comes to tracing and allocating costs, these are going to be the differences. So direct materials and direct labor, these are two categories of costs that are going to be charged to each job, traced to each job as the work is performed. So let's say I'm working on job 1, job 2, and job 3. As I use materials on job 1, I trace it and charge it to that job in particular. Let's say some $50 of direct materials. And if I'm using another $10 direct materials on job 2, I don't dump it into a bucket for all three. I'm going to trace that $10 that I spent on direct materials for job 2 directly to that job. So on this job's job order cost sheet, I'm going to list the $10 of direct materials that I used to do work on that job. And same with job 3, right? As we spend money on these direct materials, we have to charge it directly to the job that it was being used on. And same with direct labor. It's going to work the same way. As you do work and use labor on these jobs, you have to charge the specific amount of direct labor to these jobs. And that's what we use the job cost sheet for. You have an example of that in your slides and your book. So take a look at that to see how that is all organized and kept together. So direct materials and direct labor are treated similarly in how we charge those costs to jobs. But remember, there's a third manufacturing cost called manufacturing overhead. Remember, this is, if these two costs appear direct costs, manufacturing overhead is everything else, those indirect labor costs and those indirect materials costs. Okay. Well, remember, what did we say was the difference between manufacturing overhead and these direct costs? Direct costs can be easily and practically traced to their cost objects. In this case, these jobs are the things causing the direct materials and direct labor costs. That's what makes those costs direct, in that they can be easily traced to these jobs. Manufacturing overhead, though, is all those indirect costs, meaning it's either impractical or impossible to trace the cost of manufacturing overhead to a job or a cost object. So for that reason, we treat this a little bit differently. Direct materials and direct labor, these direct costs are traced to the job or the cost object. But manufacturing overhead, it isn't traced because by definition it's not something that's easily or practically traced. Instead, with manufacturing overhead, we allocate it to each job depending on how much of the activity base each of these jobs used, and that's something we'll get to in a little bit. Okay, but you have all of this manufacturing overhead for the period, okay, and we'll look at how we actually allocate that. But based on our allocation base and our POR, which we'll talk about as well, we figure out how much of the manufacturing overhead gets divvied up to each of these jobs in particular. Okay, so the main idea I'm trying to get across, at least here, is that direct costs, including direct materials and direct labor, are traced to their cost objects, and in this case to their jobs. But manufacturing overhead is allocated, okay, not traced, but allocated to each job based on the allocation base that the company chooses to use.